to show you the account growth and the effect of compounding during that period. I don't want to go through the whole account with you from last year, the last 12, 13 months, because there's an enormous amount of data on this particular screen, and I'd rather show that to you in summarized format in an Excel spreadsheet. So let's go to the start of this, and let me talk you through this right now. We are at my live account as I promised, and you can see my name, James Tevet, my code name Forex 618, and what we're going to do is go through this account from the 1st of January to the end of May 2008. I've just selected that date range to avoid spending too long on this video, because there are a lot of transactions here, and it's going to take too much time. So let's just scroll down a little bit and have a look at the first area. You can see there's the ticket number, that's the ticket for each trade. There's the date the trade was taken on, and here's the transaction. You can see a lot of it is interest, so by and large that can be ignored. The interest is the amount that the broker either charges or deducts from your account based on the carry or the difference in interest between the two currencies that you're trading. Now the important part I want to go across to is this area over here, and what I'm going to do is highlight the balance at the beginning of January. You can see it's 3,284. Now in order to work out the leverage or the lot size that I use, I'm going to round that down, and always round down rather than round up, just to be more on the cautious side. And I'm going to round down 3,248 to 84 down to $3,000, and then I multiply that by 10 to get my lot size, which is there, $30,000. So it's a very simple calculation. Take the amount in your account, round it down to the nearest thousand, and multiply it by 10, and then you get your lot size. Now you keep that lot size constant throughout the whole month, whether your account balance goes up or down, which it will do. It will fluctuate, as you're not going to win every single trade, and there will be some losers, but you keep that lot size constant throughout the month. So, and then we can start trading. So I'm going to now scroll down, and remember, this is a 10-to-1 leverage. Now you might want to trade at 5-to-1 or 7-to-1. This account is traded rather aggressively at 10-to-1 leverage, but you can choose the leverage that you want to trade with. I don't recommend that you go more than 10-to-1. So I'm going to scroll down to the end of January, and once again you can see there's a lot of transactions in here, but a lot of those are interest. And we get to the end of January right down here, and let's have a look at the 1st of February, and now you can see that the balance has actually increased to $3,905. And what I've done is now taken that, I'm going to round that up to $4,000 because it's extremely close to that, and I'm now going to adjust the lot size to 40,000, which is 10 times the $4,000. I actually forgot to do it early in the month, but I did it only on the 3rd of February. But now you can see the balance is close to $4,000, and the lot size now becomes $40,000, which is 10 times that amount. And then we continue to trade, keeping that lot size, the new lot size, constant throughout the next month, which in this case is February. And you can see that we've already increased the lot size, which means we're now using the new profits in the account to trade with the same leverage as we started with, but with obviously an increased lot size to account for the higher balance in the account. Let's scroll down then throughout February, and we keep going, and there's a number of transactions. You can see the transaction number. Now I want to emphasize that this is a live account, and this is not a demo account. Now we're going to go down all the way to the end of February, and we get down to, there we go, the 1st of March. You can see the balance is now 5,371. There it is there, 5,371. And what I do for the first trades in March, once again, I probably took a couple of trades early in March without adjusting the leverage, but I've taken 5,000, here we go, $5,000 with 354. I've rounded that down to $5,000, and I've now made my lot size $50,000. Once again, it's 10 times the amount I've got here, the rounded down amount, $5,000. Multiply it by 10, and you get $50,000. Now, let's just stop at that juncture and remember that this account started on $3,275, and now at the beginning of March, after 2 months of trading, we've now compounded our account up to 5,400 odd. So right away we see the effect of compounding, and we've grown the account by about 50%. Now let's scroll down through March, and you can see all the lot sizes through March remain at $50,000. And we'll go to the end of March and have a look at what happens by the time we get there. So here we are on March the 31st, and there's April the 1st. You can see the account balance is now at $6,000. And so naturally we want to increase our lot size, as before, to 10 times that amount. So I've now increased it to $60,000, and we retain that lot size and keep it the same throughout the month of April. So we've gone from $3,400 to $6,000 in a matter of a couple of months, and that's the effect of compounding once again that we'll see taking place. What I'm going to do is actually put this up on an Excel sheet from January to where we are today, which is the end of July, and I'm going to actually plot these account balance numbers, or the growth of this account balance, on an Excel spreadsheet, so you can see what an exponential equity curve looks like, brought about by compounding. So let's go through April, and we'll go right down to the bottom of April. You can see the account balance is fluctuating as we go through, but I've retained the same lot size of $60,000, which is pretty important, no matter whether your account goes up or down during that period. And here we go, we're at the end of April, the 1st of May, and the account balance is now at $7,500. So we've more than doubled our account size simply because we've traded conservatively. And remember all the things we've spoken about in this series of videos. We've traded conservatively, we've increased the lot size to keep the leverage the same, and now we're at $75,000 to match the $7,500 in the account. And once again, we retain that to the end of the month, and we'll go down all the way down to the end of May, and let's get down to the bottom. Once again, it looks like there are a number of trades, but all the changes and the interest are noted on the account. And there we get to the end of May, and we've got $7,000 in the account, which seems to be much less than what we started May with. Okay, that's going to be edited out. So here we go. At the end of May, we had a slight drawdown in May, and we end up at $7,000. You can see we started May at about $7,500, but this continues over the next few months to end up about $11,000. And I'm going to plot that on an Excel spreadsheet. I can't do it here because I actually split the account into two separate accounts and traded them separately. So you can see the balance actually drops here as I transfer the money. But the interesting thing is we've gone from $3,500 to $7,500 simply through compounding, and I wanted to show you on this live account so you could get a feel for how this actually works. And the videos that we've already produced prior to this and the ones we're going to do after this will explain this in a lot more detail, but I wanted to give you a real live account example to show you how this works. Okay, and that's it from this particular slide, and we'll go on to the next one. So I hope you found that useful and informative, and you can see that's really happened in a live account. Let's go across to the next video, and we'll continue with the series. All right, the best way to demonstrate risk and reward and the things that are contained on the previous slide is to once again show you on the trade report for this live account. The first thing is risk percentage, and generally I don't like to risk more than 2 to 3% per trade, and you can see in this case that the risk allowance on these trades, you can see, is $270, $208 against an account size of 5,000, and roughly that equates to between 3 and 5%. So I'm keeping the risk constant, and you can see when I have a losing trade I have a hard stop in place, and I generally have a 2-to-1 risk ratio, which I'm going to talk about in a minute. So you can see there are 2 losing trades, and once again there's no shaming in having losing trades, and I expect a certain percentage of my trades to be losing trades. But you can see there that the loss on those trades, on these 2 losing trades, is about $200 and something, between 208 and 280. Now let's move down, and you can see the winning trades. There's one winning trade, $810, and that's 4 times the amount lost on the losing trades. Let's have a look at another one. There's a winning trade there of $422, and once again, that's roughly twice the size of the losing trades. There's another small win there, but that was taken out on a trailing stop loss. So the concepts I want to emphasize on this live account statement: first of all, never risk more than 3 to 5% on your account. And you can see in those two losing trades in this example, that's exactly what I stuck to. Second of all, stick to the 2-to-1 reward risk ratio. In other words, whatever you decide to risk on a losing trade, try and achieve double that on each winning trade. Once again, you can see I've achieved, in this case, 4 times the amount of the losing trades, in this case twice, and that one again taken out on a trailing stop. The third most important thing is have hard stop losses in place. In this example, if I had let these trades run, in other words, I didn't have a stop loss in place, the losses on these two trades would have been much greater. So be prepared to take your loss like a man or a woman, and don't allow those losses to continue and to compound and to grow, and don't, under any circumstances, add to a losing trade. Have a hard stop in place. When your stop loss is hit, don't even be tempted to move your stop another 5 or 10 pips, but take the loss, and you will then get an opportunity to get back into the market when the conditions are right. So hard stops, and I have hard targets generally, and I allow the trade to run to 2 times the amount of the stop loss, unless there's an opportunity for a trailing stop, which I did have in this particular case. So very simple: risk percentage no more than 5%, 2-to-1 rule, aim for twice the amount of your stop loss, and make sure that you stick to your hard stops and don't overrun them, don't overrule them. Don't be tempted by your emotional state during trading to move your stops or to take them out altogether. Alright, so I hope that's been useful, and we'll now go on to the next video. Okay, what I have here is an Excel spreadsheet showing exactly what I show in the live account statements that I've shown in various parts of this series. And what I've done is I've summarized all of those trade balances at the end of each month, going from the start in 2007, which you'll notice was 13 months ago. In fact, the balance, we started here in May 2007, when the balance was 930, but I'm taking it from June, and there the balance was 1094. And if we go down here, and you'll recognize this from the slide I showed you earlier, from January, February, March, April, May, and so on, you'll see that the account balance has gone from 1,000 to, well, it's 10,000 there. In fact, in the middle of August, it's around 11,000 at the moment. What's interesting about this slide is we've started from a very small balance, and we've managed to increase it exponentially. And I'm going to talk about that on this slide over here, on the graph next door. But we've gone from 1094 to 926, and we've managed to use a fairly small amount of money to turn this into what a lot of people would consider a fairly large amount of money. The point I wanted to make, first of all, which Chris reminded me of earlier, is that don't expect to take $1,000 and make a living off it by drawing upon your profits every month. And that is, of course, if you're not over leveraging and trying to make $10,000 a month from 1,000, that's a sure way to blow up. But the important thing is to perhaps start for a year or two, if you've only got a small starting balance, and allow that to compound up to a much bigger balance. And then if you need to and want to start trading that for a living, you've got a much bigger stake to trade with. So that's the account growth, and I'm going to illustrate that on the graph next door, from June to July, and about 13 months. Now have a look at this next column. This is the percentage profit made every month, 24, 16, 24, 26, etc. And the average of that is about 18.8% per month profit. There was one drawdown month over here of minus 6.6%. Now if you add up all of that, add the profit that was made every month without compounding it, in other words, if you drew your profits off every month and just took the percentage profit made, the total of that is 244% over that period, which is exceptionally good, as most funds would aim for about 20 to 30% a year. It's still an exceptionally good figure. But look at what happens if you compound it. We've gone from the same 24% in July, which then compounds to 45%, and we're just compounding it and adding them together, and we end up at a 789% growth, which is phenomenal. The majority of that growth has come through reinvesting profits, at a conservative rate, conservatively trading, and being disciplined in your trading system. And so we've gone from, instead of getting 244%, we've quadrupled that to around about 800%. So that's a pretty interesting scenario, and it really does show the power of compounding, which I illustrated on the live account statement to you earlier. So this is really phenomenal. Now what I want to do is go across to this graph, or chart as some people may call it. In my terminology, this is a graph, and the things that you trade off are called charts, and people often mix those up. But here we've got a graph plotting exactly what we have here. That's starting at $1,000, and this is the account growth as we go through this 13-month period, ending up at around 10,000. Now, again, the interesting thing about this chart is you can see the gradient of the chart is steadily increasing. And I've shown you this before in previous videos, and this was the chart, or the graph, should I say, that I showed people in the first introductory video to compounding, and there was an enormous response to that in terms of emails and people wanting to join the Traders Club. Now, this grey line here, or slightly grey-blue line, is an exponential curve. It's a mathematical curve which starts off slowly and begins to increase in gradient as you go on, and you can see we've got that sort of shape, if I can just overlay there. And the more time goes on, the steeper and steeper this equity curve becomes, and the effect of compounding actually begins to snowball your account faster and faster. That's exactly the effect we want, and that's why we compound rather than taking profits out every month. But you can see that even if it's done in a fairly conservative manner, it could be 5-to-1 leverage or 10-to-1 leverage, and simply having a simple trading system. In this case, we're only making 188 pips a month, which most good trading systems should be able to make with ease. And we've taken that very small profit at a conservative leverage, and we've compounded it, and you can see how we've gone higher and higher. As I said in the previous videos, this, by the end of next year, another 12 months' time, should be at about $100,000, and then, touch wood, another 12 months' time, it should be at about $1 million. And that'll be a grand occasion. We'll break open the champagne, and that's when I start writing my book about my journey as a trader. So I hope you found that interesting. The key to successful account growth is in compounding. Remember that you can start with a small account, which a lot of people have to, and after a year or so, it's much bigger, and after another year, this will be at around $100,000. So that's exactly what you want. And once your account grows to a level where you can probably live off it, you can then take some of the profits out and leave some of them in, and allow the profits that you leave in to continue to compound, and you can live off the profits that you take out, or at least contribute significantly to your monthly expenses. Okay, well, now I'm going to go across to the next video. Hi, well, this screenshot and video is all about this live account and the effect of compounding on the balance, and I want to use this account to demonstrate a few other matters I want to discuss with you, such as leverage, the trade lot size, how to adjust your leverage as the month goes on, and so on and so forth. Now, this is a live account statement from my one of my trading accounts, this one that I've been talking about, which has moved from $930 to about $11,500. And because there's so much information on this report, and you can see this is just for a 3-month period, just as I'm scrolling down, I've chosen to do just a 3-month period as an example out of the 13-month period that this account's been running for. And what I'm going to do is summarize all of this in the form of an Excel spreadsheet a little bit later on in the next video. So you can see this is my account, and there's the date range from the 1st of Feb to the 6th of May. And so let's have a look first of all, and have a look on the screen to see what's going on here. Well, first of all, there's the ticket number, which is just a number given to each trade as it occurs. There's the date on which the trade took place. These are the transactions, and you can see as we go down that not only are the trade entries and exits recorded, but there are also changes in the trades. There's a lot of interest recorded, and there's a whole lot of other information that is given on this report to keep track of what's going on. So all that we're interested is in the trade entry and exits, and the lot size and the account balance and the leverage applied, and so on and so on. Incidentally, the interest, which you'll see in areas like this, is the amount that the broker either charges you or awards you based on the carry or the interest difference between the two currencies that you're trading. So for example, if the US dollar attracts more interest than the euro, then you'll earn interest on long US dollar or short euro positions. But that's a subject for another video. So there are interests, there are order changes, and so on and so forth, but we won't look at that too much. There's the price at which the trade was executed. These are the units, and each one of these stands for the number of dollars. So, for example, the balance of $3,000, we've traded a unit of $30,000, and I'm going to talk about that in a little while. There's the interest applied, and there's the account balance right at the end. Now, at the time that this report was recorded, you can see the balance at the beginning of February was $3,905. Now, remember again that this account started way back in 2007, about 13 months from right now, and we're in August 2008, with an amount of about $930. And between that time and where we are now on this report, February the 1st, the account balance has gone up from, call it roughly $1,000 to $3,900. What I want to talk about now is the leverage applied versus the account balance. Now you can see that the account balance here to start February is $3,905.12, and what I've applied here is a leverage of 10 to 1. So I've taken $3,000, and I'm going to explain a little bit. In fact, this moves up to a $40,000 lot size, and in fact I forgot to change that as the month started, but let me explain that to you. For every $3,000 in your account, or let's start at $1,000, I'm trading at a lot size of $10,000, and the leverage then is simply the account balance multiplied by 10. In this case it's a 10 to 1 leverage, and that gives me the unit size or the lot size that I should be trading. So if I have an account balance of $3,000 and I choose to use a leverage of 10 to 1, then I multiply the 3,000 by 10, and that gives me 30,000, and you can see there I have a unit size or a lot size of $30,000. You can see as we began February, in fact the 2nd of February or 3rd of February, I've taken that $3,900, I've rounded it up to $4,000, and I've applied a lot size of $40,000, which is 10 times $4,000. Now, you might choose to use a leverage of 5 to 1 or 7 to 1 or even less than that, and the way to calculate your lot size is simply by multiplying your account balance by the leverage that you choose to use. So if your account balance is 3,000 and you choose to use a 5 to 1 leverage, then your lot size would be 15,000 and not 30,000. In this case, as I said, it's a 10 to 1 leverage, so on a 3,000 account I'm using a 30,000 lot size. But you can see as we start February, I've rounded the 3,900 or 800 up to 4,000, that's to the nearest thousand, and I've multiplied that by 10 to get a 40,000 lot size. That would be 4 mini contracts if you're trading a mini account, or 0.4 standard contracts if you are trading an account which allows fractions or fractional sizes of lots. Alright, so now we just begin trading, and you can see as we go through the month of February, the account balance fluctuates up and down. Starts at 3.8, it drops down to 3.7, and you can see although the account balance is fluctuating, I've kept my lot size constant at 40,000. And the reason for that is I adjust my lot size at the beginning of every month based on the starting balance at the beginning of the month, and I keep that lot size constant despite the fluctuations that might take place in the account, and I keep it constant right the way through the month until we reach the next month, and then I readjust the lot size based on the new account balance at the beginning of the next month. So if the account balance has gone up, then I increase the lot size. If the account balance has gone down, then I reduce the lot size, and I do that on a monthly basis. Alright, so let's scroll down and have a look a little bit further down, and you can see once again the account balance is fluctuating as we go through February. We're on February the 6th now, and the account's gone up to 4,150. And we continue February the 7th, we're up to 4.2. And let's go all the way down towards the middle of February. We're at now $4,700. And we continue towards the end of February. Let's get right down there. You can see there's an awful amount of information here, and that's why I've chosen just to illustrate 3 months on this live account statement, and then I've summarized the rest on the Excel spreadsheet a little later on in the next video. Alright, so we're on February the 27th. There we go. There's the end of February, and you can see now February the 29th. That was a leap year, incidentally, and the account balance is now at $5,371. Now, I've kept the account, the lot size constant throughout the month of February, and then when we start the next month, the month of March, I've then increased the lot size up to $50,000, which you can see there, and that's based on the new account balance of around $5,370. And in this case, I've rounded it down, so I've gone from 5,300 odd, and I've rounded it down to 5,000 in order to err a little bit more on the cautious side, and I've adjusted the lot size that I'm using to 50,000, and then we continue to trade. So let's continue down through the month of March, and incidentally you can see how nicely this account has risen from around 3,700 to 5,300, a pretty good month of trading. But now what we've done is we've reinvested that profit. So now we're at 5,000 odd, and we've reinvested that profit by increasing the lot size. Although we've increased the lot size, the leverage obviously remains the same. And so the effect of compounding is really to take the profits earned during the month that we're trading in, and at the end of the month is to use the same profits that we've just made to increase the lot size, and that enables us to benefit and increase our account rate of growth based on the new account balance every month. Of course, if the account balance went down, then I would reduce the lot size to account for the new lower account balance. So let's continue down through March, and you can see middle of March we're at about 5,200, so not a lot of movement, in fact slightly lower. And let's go to the 15th of March, we're at 5.7, and you can see the account balance is obviously fluctuating because you're not going to win every trade. There will be ups and downs throughout the month, but as long as your risk-reward ratio is correct, as long as you're not taking big risks and there are no enormous swings in your account balance, and your trading system's good and you stick to it in a disciplined manner, and you don't get emotionally attached to trades and all the things we've talked about, your account balance should zigzag up as the month goes on. And you can see that's exactly what's happening. In fact, we didn't make a lot of progress in the middle part of the month, but then as we go through March and we get right to the end, I'm going to scroll down right to the end of March, you can see that we end March on $5,700. So we're now closer to 6,000 than we are to 5,000. So what I've done then is, again, I've increased the lot size. Let me just see where we start the trading, and we're still here with 31st of March. Excuse me, this was the 31st of March. We actually had a good couple of trades, and we ended March on $6,000, just over $6,000, and immediately I multiply that by 10, and I've rounded it to $6,000, and then I increase the lot size to account for the new account balance. So 10 times 6,000 gives me 60,000. There's the 6,000, there's the 60,000 over there, and I've increased the lot size to make it the same leverage as before, 10 to 1 leverage, but now once again I'm reinvesting the profits I made during the month of March, and I'm now able to trade a larger lot size. So I'm going to go through one more month of this for you to save laboring the point, but we go into April now trading. You can see throughout April, as we did in all the other months, the lot size remains completely constant. I don't increase it or reduce it, and this is a good strategy to avoid you increasing your lot size too much or reducing it too much, but just keeping constant so that you have a conservative approach to trading. But as we go through April, you can see we've gone up to 7,000. Even though our account balance has gone up to around 7,000, I've still kept the lot size at 60,000. And we go through April, dipped down a bit to 6.3, back down to 6.3, and then as the month draws towards an end, we're above 7,000. We're about 7,500, and let's see what happens towards the end of April. And with a bit of luck, as we enter May, you can see the new account balance is just around 7,500. And so what I've done in May is I've now increased the lot size to $75,000. So in this case, really there was nowhere to round this to. It was bang in the middle between 7 and 8,000. So I've opted to go for a 75,000 lot size, which again is 10 times 7.5, gives me 75. And once again, the leverage remains at 10, if I can draw that, 10 to 1. A little bit tricky drawing with this pen. So my leverage remains at 10 to 1, but I'm able to trade a larger lot size because I'm reinvesting the profits. In some of the other videos, I'm going to show you the risk-reward ratio and how to avoid locking onto losing trades, and how to increase your balance by using double the amount of reward that you take on your risk, and so on and so forth. But I'm going to stop right there, and you can see the end of May we're around about $7,500, and we're now trading a $75,000 lot. Let me just remind you, just remember that $7,500, $75,000 lot size, and let's go all the way back to the top where we started, and you can see we started on $3,900, and we were trading a $30,000 and then a $40,000 lot size. So there we go. That's what that's all about, and I hope you found that useful. This video was to really illustrate the effect of compounding, how to increase your lot size as the month goes on and as you make profits, and how to reinvest your profits. And at the end of the day, this account will begin to snowball and you get an exponential account growth, and you'll see that in the video that follows this one. Well, take care.